The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusible isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusible.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello, and welcome to Moving Iron Podcast Markets with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the world of a commodity. Shawn, how you doing today, bud?
Pretty good. Had great holidays. Glad to get started for a new year, and we're looking ahead and trying to figure out how everything's going to play out here. But right now, what's front and center certainly is South American weather still, and obviously the big change in the Northern Hemisphere winter that we suggested would really get going. And it's definitely, we have some record cold, Plural of Vortex, so snowstorm. We're going to get more snow in many areas in the next 10 days, and they got all winter last year. So winter's back, and it ain't going away until March. It's going to be a long and cold one, despite most forecasters had been predicting a blowtorch winter on strong El Nino, which we just talked about on your show many times.
Yep.
Was a false narrative. So
Yep. Yeah, that was we talked about that quite a bit. And I remember telling my mom when I was home for Thanksgiving, I was like, hey, the guy that's on the podcast all the time, Shawn, he's don't get used to this warm weather because it's gonna get cold. And I talked to her before I made my trip out here to Nashville to see a customer. They were expecting 6 inches of snow across there in central Kansas. And There's a guy that I'm working with that just showed up here from the Des Moines area that they're expecting 10 to 14 inches of snow, and cold air.
Yeah, I mean, very cold air, and there's a lot more snow coming. It's a very active pattern. Exactly opposite from last year. Last year we had a record cold December and blowtorch the rest of the way. This year's totally reverse. Everybody got like I said, got caught thinking El Nino warm winters. Well, that's true if it's a super El Nino, but everyone misconstrued that the sea surface temperatures are the only thing you look at, but the most important thing is the atmospheric response, which never delivered anything but a borderline weak El Nino response, which means El Nino Mordecai, negative QBO, all these things mean really, really cold, nasty winter for once you got past December for, especially the center eastern part of the country with a lot of nor'easters, one after another, and we're seeing one coming up and another one coming behind it. I mean, it's exactly what we forecasted back last August when we made this initial forecast.
Yeah.
So,
and then we had, if you're looking at the weather pattern that we look at now, there's a few things coming, and you're right about the other part of the weather pattern that you're talking about too, where you had, like out west where I'm at, it's been really, really cold. We have not got the moisture this fall, these fall snows that we would normally see, these late, early winter snows and stuff. It's snowed, but it's not been of anything of any kind of magnitude. We've gotten the cold to come with it, but just no moisture in the air.
Yes, like I said, the all the moisture has been far more concentrated, east, center east, not center west. Like last year, it was center west. Just couldn't stop the snow from falling. It always snows out west a little bit. I mean, I'm not saying there's no snow,
Right.
but I mean, relative, it's going to be an eastern snow story this year, eastern-based snow story this year.
Yep.
So they crushed natural gas prices in December because they said, well, it's going to be a warm rest of the way, and now their natural gas is taking off because apparently, magically, somehow, we're actually going to have a really, really cold, nasty winter that no one saw coming.
Yeah.
And I am flummoxed and surprised that natural gas got down to COVID levels. I really was not anticipating the price could get that low. I should know better knowing natural gas overshooting all the time, but it did what it did. But now it's on the mend. It's roaring back, and in some sense, some sane sensibilities coming back to the natural gas market about what's really laying ahead. And so what we see happening, I always hear people talk about. So last year the big story was, we have very low inventories. We're going to run, it doesn't matter what the inventories are at the beginning of the season. It matters what the inventories are going to be at the end of the season. As you know, because of the blowtorch winter last year,
right,
which we predicted, we had very, very high inventories at the end of the winter, which means we had plenty of supply, which means it's very, very hard to get into trouble because you're going to go into the winter with plenty of supplies. But it doesn't matter. Are we going to have another blowtorch winter? If we did, then we are in deep trouble. We're going, but if we're going to have a really cold winter, then we're going to end this winter with very low inventories, dramatically lower than it was last year, which means it's going to be very hard to build inventories back to where they need to be ahead of next winter. Next winter, our preliminary work is telling us it's going to start early, which would really, really be unfortunate, because if you go in with low inventories and you have a start, let's say a very cold fourth quarter, and you get the heating demand starting early, that's where you can kind of generate potentially a panic in the marketplace. We're looking at La Nina coming back for the coming summer and fall, which means two things: a lot more heat in the U.S., and that means a lot more cooling demand, which means that the inventory build is going to be much. We had that a couple of years back. We had a very hot summer, and we didn't get those inventory rebuilds. And what does it also mean? It means we could have a very, very hyperactive Gulf of Mexico hurricane season coming up. We know what happened 2 years ago when we had hyperactive, and we cause all kinds of havoc with the hurricane. So there's just multiple issues here with the natural gas market going forward that all suggest that the revisiting of the COVID lows, which have still astonished market, was able to do that, is just going to be just a one final long-term opportunity for long-term physical buyers of, energy, of natural gas, of propane, of, nitrogen-based fertilizer, just all those things that are tied to the natural gas cycle. I mean, you just have a very exciting multi-year opportunity to lock in very cheap physical supplies. And, and so you have to be thankful the market did something completely stupid. It just gave a windfall opportunity for those that are able to, go against the grain, no pun intended. So
No pun intended.
no pun intended at all. None.
So let's talk a little bit about wheat right now. So we had this rough start getting wheat planted this year just because of how dry it was this fall. We're looking at some pretty significant cold weather coming through. I heard, plenty of people talking about the polar vortexes that were going to come in late January, about a month ago, which you don't typically hear that kind of a conversation. But this early, they're usually like 3 days before one comes. And, oh my God, we're having a polar vortex. So as you're looking at the situation we see right now, what are your thoughts on the wheat market and potential winter kill that we might see out there coming here pretty soon, the next couple of weeks?
Well, there is snow falling center
Right.
east, and so there's a lot of protection on there. The problem with winter kill is no one really knows ever
Right.
to what degree it really is. It isn't, and it's one of those things you get a little short term reaction, but the market just waits for post dormancy to tell them what actually happened. So it doesn't, don't get me wrong. I mean, if there's a bunch of exposed ground and we're gonna, which can happen. I mean, right now, for the most part, I think most of the key winter wheat areas are going to be protected by enough snow that I don't think the market will get too excited. Doesn't mean there's no damage, by the way. It just means
Right.
I don't think the market can get excited about it. We're more excited. I'm never excited about shorting food supplies but what I am more concerned about is a May hard freeze this year. And to me, that's really, the market would undoubtedly react to that because it's post dormancy. There's no doubt about damage that's done
Right. Yeah.
during that kind of time. The devastation to production that you would have for winter wheat with a hard freeze in, let's say, the first half of May would really be devastating, not to mention the interruption of corn and soybean early planted acres and all the chaos that would create. But that's really more of what we're looking at, is the potential, probably the highest probability for a May freeze here that we've seen in probably over 20 years. Doesn't mean it's going to happen. Just like when we predicted the frost in Brazil, doesn't mean it's going to happen. But all our work says that all the variables that typically have promoted, late spring frosts in the past are in alignment for this particular year, which means we have our highest chance for it to happen. So if it were to happen, or if we were to get a weather forecast that said it could happen, that's how you get your winter wheat market to react to cold weather. I don't think you're going to get more than short-term responses, and then the market's going to question whether it really mattered or not. I think the bigger issue for wheat is the fact from exports. For the last couple of months, their exports have been way below last year. They continue to be way behind, and so they've taken their foot off the pedal. And as you know, that's been the only thing that really has mattered in the last year. So long as their foot was on the pedal, selling wheat, very hard for international wheat prices to do anything. But with their foot off the pedal, now those lost exports have to be bought elsewhere. And we're starting to see some of the biggest exports from soft red winter wheat here in the U.S. we've seen in 20 years because of it. So to me, that's really what I see driving the wheat market, let's say over the next few months. Isn't necessarily polar vortex cold air other than short-term price shots. It's really, the lost export supply from Russia and the increase in demand for foreign exports because of that. And of course, if we can get this kind of a debilitating U.S. frost, I mean, you have yourself the potential for a panic trade, if that were to occur. Obviously, as we get closer, as we always talk about signposts, we're looking for further signposts to verify or deny that about this probability for May. But as we get closer, we'll be able to pinpoint greater chances, or more specifically, where the epicenter of a frost might look like, and hopefully we can figure that out and provide some good information for those that watch your show. So
I hope so. that'd be good stuff to know ahead of time.
Yeah.
Shawn, as you're taking a look at, you talked about some chaos and dramatic stuff here as we started out, but as you're looking at what's going on in South America, that we're seeing a weather pattern come into South America now. Probably not in time to say do anything for the bean crop that's there. You just put a report out about this not too long ago, actually a day or two ago, talking about this very topic. And as you looked at your models now, what are your thoughts about South America moving into the second corn crop, and then how do you think the bean situation is going to play out?
Remember, we predicted we would get some wet weather starting,
Right.
later in December into January. So
Yep.
this is exactly what we've been warned about. We talked about a positive AAO and some other factors that were going to lead to some increased rainfall. But I think people have to understand, prior to 2015-16, there had never been a drought in central, north, central, west Brazil, ever, because it's always been a rainforest.
Right.
We've talked about the deforestation of the Amazon,
Yep.
and how that's changing the complexion up there. And so that was the very first drought that they've ever had. Meaning they never have had a back crop in central, north, central, west. So the only thing we can go by as a relatable, outcome versus result is 2015-16. So if you look at what happened in 2015-16, up to where the rains began, it was drier and hotter this time around than it was that time around. Vegetative health conditions were worse this time around than that time around. The rainfall that has fallen between late December through now, and for maybe one more week, and then we're going to actually go back to a warmer, drier pattern. They had more rainfall back in 15-16 than we had this time around, meaning the rainfall was actually more plentiful back then than it was this time around. And it was hotter this time around than it was that time around. So so if you look at the vegetative health, just came out, I think this morning or last night, for the recent week where they've had a lot of rainfall. And our vegetative health is below what it was in 15-16. So all the people that are suggesting, and I understand rain makes grain, fully expected speculators to sell the rainfall because that's what they're taught to do. I get it. But it's not going to rehabilitate the crop. You're not going to have a good soybean crop. You're not going to have, I think originally they were supposed to grow 165 million metric tons. We're not going to produce 165 million metric tons. Not going to happen. If we follow what happened in 15-16, we would have a crop potential of around 145 to 150 million metric tons. Given that the heat was higher, remember, heat is actually more important than moisture, because it was hotter this time around and vegetative health is worse time around. We'd expect that we could see something a little bit less, maybe closer to 140 million metric tons. So what does that mean? Let's break this down into bushels, because we always talk about bushels here in the United States, right? So if we come in at 150 million metric tons versus last year's 160 million metric tons, that would mean that Brazil would have about 400 million bushels less soybeans to export this year than they did last year. So their exports theoretically would be off by, let's say, 300 to 400 million bushels. Obviously, if it's 140 million metric tons, then they'd have somewhere between 600 and 800 million bushels less soybeans to sell. Now, there's a lot of talk about, they're going to lose it in Brazil, but they're going to gain it in Argentina. Well, that is true. But the big difference is Argentina does not sell raw soybeans. They sell meal and oil to those that want meal and oil. There's a lot of countries that don't want meal and oil. They want the soybeans because they have the crushing capacity to make money by crushing the beans and making oil and meal themselves. So if you're a raw soybean buyer, you're not going to go buy meal and oil. You're going to go buy raw soybeans. And if you can't get it from Brazil, you got to buy it from the United States. It's very important. It's not a one-for-one relationship here. People keep making this mistake. That's not how this works. Now, don't get me wrong. Over the summer, there's going to be increased availability of meal and oil, and that supply, will help, reduce some of our exports of that. But when we talk about raw soybean exports coming out of the United States, which is what drives soybeans higher, that's the driver, always, we're going to have a significant shortfall. and the exports from the United States are going to start to surge because of it, whether it's from China or from others. So that's the story. And the market is like natural gas. This is just making a horrific error in what they're doing here because they're thinking, hey, the crop can be rehabilitated, which it can't. And then somehow they think that Argentina can save the day. Well, they don't sell the same product. And remember, they had a 1 in 100-year drought last year, Casey. They ran out. They had to import soybeans because they didn't have enough to make meal and oil. Okay, so they're going to have to put some of that supply some of the better crop they're going to have this year. Some of that's going back into ending. They're going to build inventories again first, foremost. Remember, the only way you survive in Argentina that's gone bankrupt, I think the country's gone bankrupt at least once every 5 or 10 years for as far as I've been alive. The only way you survive 100% inflation and 50% inflation, which they've had ever since I've been alive, so you have to have the product stored in your bin because that's how you participate in inflation and you sell when you need to. Well, they're going to rebuild that. They're going to rebuild those inventories first, and then they're going to start to sell. So even if you buy the story of they're going to make up the difference, which I don't because they're not, they're still going to have less exports than people think because they're going to build up those inventories because the farmer there, yes, this new guy got in as president. He's going to save the day. He's going to change everything. Well, show me. Maybe it's all true, but I don't believe a farmer down there trusts anything about anything. They're going to stick those soybeans. They're going to build those meal and oil inventories. They're going to protect themselves like they always have. And if it looks like that they finally have a leader that's going to lead them to the promised land, they can always sell them at a later date, but they're not going to do it now. Right. So when we look at all of that, now corn is different. What Argentina gains versus what, it's the same product. Corn is corn. They're going to sell. So we looked at that. We looked at so it acts about second crop corn. So second crop corn is going to be planted horrifically late because soybeans were planted horrifically late. Even if we had ideal, perfect weather, planting corn late has always meant significant reduction in yield and significant reduction in planted acres every single time, bar none. We don't need a weather problem to have a big crop shortfall. We don't. In fact, if you look at what happened in 15 and 16, the weather, I wouldn't call the weather perfect, but it wasn't the worst weather we've ever had. And the corn crop was down 22% year over year. So when we look at our weather outlook, the weather that really matters for corn is what's the weather when it pollinates. Well, it's going to pollinate at the heart of the dry season in Brazil. Not typically a good thing to do, right? So normally pollination would start getting going in mid-March, and it would be over by the first half of April. But we're going to be mostly pollinating now from the first part of April into the early part of May. That's the heart of the dry season. We just don't see anything that says that that's going to be anything but probably drier than normal during the dry season, which is not going to turn out well. So we're going to go with. So if you look back the last 20 years at late planted corn, the average reduction in corn production, we've been down is 20%. We've been down 50%, we've been down 25%, but the average decline in a late planted safrinha corn crop over the last 20 years, when it's occurred, is 20%. So we're going to go with that because that's what history says we should go with. And if weather is worse, and we're right, and the weather is actually more unfavorable, then it's going to be more towards 25% or more. If it's a little better weather, then maybe it's going to be closer to 15% versus 20. Either way, it's going to be down substantially. So if you go at 20% and you look at how much Argentina would increase corn production and you work through the mix, net corn production, South America will be down about 600 to 700 million bushels. If you equate it to bushels, total production based upon Argentina being good, Brazil being bad, along the lines I've just said, means that they're going to have a shortfall of about 700 million bushels short, meaning they're going to be able to export that much less in the upcoming cycle than they did last year. It was only the only place that has corn to sell, and that's us. So the 2.2 billion bushel carryout that everyone is so hot and bothered about, that's somehow this behemoth supply that we've never seen before. I mean, I don't feel people realize we used to have 3.5 billion bushels carry out, 7, 8, 9 years ago pretty regularly. 2.2 ain't nothing. Yet everyone's acting like it's this massive supply. It really isn't. But if we really think this through and we say, okay, let's just go with Shawn's 600 million bushels, then our actual carryout's going to be maybe 1.6 to 1.7, which is enough, but not too much enough. Like it's borderline enough. So, when we had 3 billion bushels carryout, Casey, we could have a really bad crop and be fine.
Yeah.
We now, if we're actually 1.6, 1.7, we don't, we're not, we can't handle, a somewhat off crop. Like, I mean, even if it's a little bit off, we can't handle it. Okay. So that's what we're looking at. And now think this through. If we have a frost in May and we get off to a really fast start in April on a fall spring, and we got the corn planters rolling, we get the soybean planters rolling, and we get a hard freeze, and we're replanting all those acres in late May, early June, I don't think the market's going to be comfortable about what that means. So we talk about corn in Brazil. The later you plant, the more it pushes it out, right? Well, if we're gonna let's just take this through and say, let's say a good portion of those early plant acres, we got to replant them in late May, early June. Well, that means we're pollinating that in late July into August. Well, La Nina's coming back. In our preliminary work, at minimum, it's coming back by mid-July. So potentially your hottest, driest weather pattern would be back half of the growing season. If you plant corn late and you push it out into that back half, the key to pollination is heat. If it's too hot and you come up a little short of moisture, that's how you kill pollination. It could be the driest pollination you want, but if it's cool, you'll find enough droplets to get by. And of course, then we go into a La Nina South American growing season. And that means Argentina is back in the hot spot for terrible crops again, and we start the cycle all over again. So I just look at all of this and just like natural gas, getting down to COVID lows just recently, corn sitting here at 4.5 on the nearby price. It's not correctly ascertaining the future. It's looking at now. That's what everybody does. They look at now. Oh, we got 2 billion bushels according to the USDA. Current exports of corn is not so good. I understand that. We all know that. You don't need me to tell you that. What do you need me to tell you that? Anybody can do that on their own. What are you paying me to tell you that? The market knows that. It's priced in already. What you need me to tell you, or what you need to know, is what is that going to look like 6 months from now? Not today. Who cares what the numbers are today? It's history. And anybody talks about is what we already know. Well, what the hell is that going to do? How do you predict the future price? Well, that you already know. It's not about what you already know. It's about what you don't know that you have to predict we're going to know 6 months from now. And what I'm telling everyone is, according to what I see, the narrative 6 months from now is going to be much, much less bearish than it is today. And I think there's going to be plenty of reasons for the market to get more excited. And it just so happens, of course, it happens, speculators, of course, as a percentage of openers, are at the highest short positions they've ever been in the history of the corn market at exactly this moment. You couldn't dial up a better scenario for a sudden and sharp and wild short covering rally as we move into the spring and early summer. If any of these scenarios that we've just discussed decide to show themselves and get all these computers who are trading our markets now to go, oh, the momentum has shifted, so buy, and that's all. It's just a computer generated program that says buy. And right now they're saying sell. Everyone thinks that there's people sitting in a room looking and thinking this through. That's not. Unfortunately, computers are trading the markets now. It's a bad thing and it's a good thing. It's a bad thing because we can see prices divorce themselves from reality far more than we would have normally expected, and it can be very frustrating. At the same time, it offers tremendous opportunities for mispricings that long-term physical buyers and hedgers can take advantage of. That's how I look at it. But it's it's the long-term picture that really those that have a long-term orientation can really take advantage of the idiocy of momentum-driven computers that have massive capital, the likes we've never seen before. So
A lot of good stuff to pay attention to. All right, Sean, we got a question from a listener. Steve sent this in. You kind of answered the first part of it, which was his question was knowing what we know about South American moisture versus other dry years. Is there any difference in heat this year compared to your other years? You've talked
much
about
hotter,
that.
much
Yeah,
hotter,
You
much
hit
hotter all
on
the way
that.
through.
You hit on
So
that.
yeah, we already talked about that. Yep.
All right. Second question is, see, in your commodity analyst, what hypothetically happens to an ag commodities if the U.S. gets involved in a world war or a war breaks out here in the United States, or a civil war or something like that breaks out in the United States? So obviously all those would be bad. I think, what was Einstein's famous remark? I don't know what World War III is going to be fought with, but I know World War IV is going to be fought with sticks and stones. So I guess, you could take a little bit of that into this. But I guess as you're looking at this, we had Xi not too long ago sit right across from Joe Biden, said, "You're with me on this whole Taiwan thing, right?" So just so you know, we're doing that, and it was that very, just the way he said it and the way it came across is just like it's going to happen. If that does happen, that could spring a lot of other countries to get involved. If there were something that were to pop off there and the United States got involved, what we're seeing in the Iraq in Iran, with the tensions there, with the Houthi uprising that we're seeing, and the stuff going on there, there's some tensions that are building there as well. So I guess lots of geopolitical stuff going on that could cause a world war of sorts. I guess, Sean, as you look at those scenarios, if something like that were to break out, what would your expectation be for commodity prices?
Well, let's talk about the geopolitical war cycle. It's a 56 or 50, 53.5 year cycle, I believe it is. And it's coming due. The peak is coming due in 2026, give or take 1 year. We did an analysis of all periods where we consider to be world wars and what that meant for commodities, hard assets. And in every single instance, it was a wild inflationary period going into and through those geopolitical war cycles, world war cycles, because whoever's fighting the war, if it's a global war, everyone's having to spend enormous amounts of money to fight it. The only way you can do that, you have to print a tremendous amount of money, and you have to borrow a tremendous amount of money to fight these wars. These wars cause a dramatic increase in protectionism, meaning that everyone wants to stockpile inventories for a rainy day because they're afraid George and Jim and Jiggle and Heimer and Schmidt are not going to sell it to them tomorrow, so they better buy it today. So everybody front loads purchases because they can't afford to run out, especially for things like wheat and rice and things that are very important to their society. Trade flows, get ruptured. Production capacity, as we saw a little bit with the Ukraine, production capacity gets reduced. Could we have a refinery get destroyed in Saudi Arabia during a world war? Of course we could. What does that mean for oil production? What does that mean for the price of oil? So all these things have tended throughout history to be inflationary for hard assets, for commodity assets, going into and through these crescendos in the geopolitical cycle. And we're clearly in an escalating geopolitical cycle. I don't know if the 53.5 year cycle will repeat as it has for the last 500 years, but I'm going to go with that cycle because it has. And it says be on the lookout for some kind of a real dramatic crescendo of whatever's going on and however it might end in that 2026 plus or minus 1 year period, which would mean that the risks to geopolitics are for upward inflationary risks to commodity assets, to hard assets, to food, to energy based upon that. And obviously, given that the U.S. still has by far the largest military in the world by an infinite amount. And because our finances are as precarious as they've ever been, if we got immersed into a world war where we had to dramatically increase our spending at a time that we're already in probably the worst financial shape our country has been in since World War II, the amount of money that would have to be printed to fund that kind of a war would be astronomical. We couldn't tax it. You can't, there's nowhere to get the money. You'd have to just print it if you're going to fight the war. And boy, we just went through one of those things. And during COVID, we printed a ton of money and we saw what the outcome was. Well, it would be COVID all over again, but it wouldn't be for COVID. It would be for fighting World War III. We'd have to print a tremendous amount of money. And so we'd have too much money chasing, guns and butter. All the money be going for non-productive uses, and that means inflation. So, I'll never say that every time is the same, and maybe this time will be different. But I'm going to go with what has always happened to hard assets for our studies going back 500 years. That would be the likely outcome. That if any of these scenarios that the gentleman that sent in the question and others talk about, and we don't know what's going to happen next, but if any of them were to happen, that's to me is where your risks lie. So.
Yeah, a lot of things to think about there. If you look at the geopolitical side of it, and I had Chip Mellinger on here about a week ago, and we were talking about is 24 shaping up like 23 did, and I just don't. It doesn't feel like there's anyone's had a chance to catch their breath from 23 going into 24. It's just
first of all,
thing going again.
It's an election year in many countries, not just the United States. So but just that by itself means it's not the same year. We already know it's not the same year. So, because election years means always different, always. Federal Reserve is already saying they're going to start lowering rates. They just pivoted all of a sudden out of nowhere. They're going to start lowering rates and printing more money again. So that, by definition, that's completely different from what happened in 23. So just those two pieces of the puzzle are entirely different. And we're going from El Nino weather pattern to La Nina. So from a weather perspective, completely different.
Right.
So we look at all those three things. It can't be the same year because none of the three key variables, which is monetary policy, currency, geopolitics, government, action, spending, is remotely going to be the same in 24 as it was in 23. Now, we can argue what the outcome is. You can argue, what this, then that, and, we can argue about the pathway forward, but it cannot and won't be the same kind of a year. It'll be very different.
Yeah. Sure. Be a fun ride no matter what, man. There's a lot of things to pay attention to. So, Shawn, look forward to working with you more here in 2024, and look forward to having a prosperous 2024 for the folks listening.
For sure. And the last thing I would say, Casey, regarding this geopolitical stuff, usually the very, very best asset to pick up on a world war or this kind of thing is really the gold market. If that market, it's been very strong in the last 3 to 6 months, but if that really were to break out on the chart and really start trending and going into some kind of a parabolic move, which is done many times before, especially ahead of geopolitical escalations, I really think the gold market would probably sense this kind of an event well in advance, because there's always people in the world that know exactly what's going to happen, when it's going to happen, and who's going to do it and why. And I'm sure they're going to get involved in our commodity markets, buying and selling our commodity markets based on what they already know, even though you and I don't know. So I think gold's a very important asset to watch. And I know there's a lot of gnashing of teeth over Bitcoin. It's a scam. It's a Ponzi scheme. It's a lot of things. But until proven otherwise, it's become a digital monetary asset. And until it's proven otherwise, it's a digital monetary asset. It's something we recommended in our newsletter at 700, for those that don't know, many years ago, as something we thought would be of interest. Obviously didn't know it was going to turn out the way that it did, but it did. And so Bitcoin is another asset that I think would probably go crazy like gold in advance of some kind of an escalation of a geopolitical. So I would watch Bitcoin and I'd watch gold for synchronous escalations, showing that capital is positioning or fleeing or getting ready for some kind of a significant escalation of a geopolitical nature, of a world war, of something of that nature. I think those two assets would capture a tremendous amount of capital flow well in advance, and then commodities will come in underneath it as we start to hear about what we did not know was coming. You know what I'm saying?
Right. Yep, for sure. Well, good stuff as usual, Shawn. If folks want to reach out to you and get more information about what you're doing at Hackett Financial, what's the best way to do that?
Our website is at Hackett, Hackett, advisors.com. We have a Twitter page at Ferretix11, have a LinkedIn page. From time to time, not often, but we'll put a few things out. Put something out yesterday on soybeans just because we couldn't take the narrative anymore. We just felt we had to put something out that here. So anyway, we try to put some things out from time to time that people can get an idea of our cycles, our work, our weather, and to see if how we look at the world of commodities and agriculture specifically is of value to those watching your show.
Right on. Shawn, appreciate you, and we'll look forward to working again further into 24 here.
Same here, Casey. Thanks.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Go to, where else am I at? Go on Instagram, Moving Iron LLC. Go to TikTok. Go to, what's the other one? I can't remember all now. I got them everywhere. So let's go find me, Moving Iron Podcast. See the video version over on YouTube, which is the Moving Iron Podcast YouTube channel. Check it out there. Go to Moving Iron LLC for everything Moving Iron related. I should have a new website up here pretty soon with a lot more information on there and some cool stuff coming out there as well. So with that, I am Casey Seymour with Shawn Hackett. Let's move some iron, folks. Out. The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusible isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusible.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and